Study after study has shown that women are less aggressive than men when it comes to investing.
We systematically underestimate our own abilities in terms of making decisions.
The U.S. has a retirement savings shortfall of $13 trillion. Not million, not billion, trillion. And newsflash, ladies, it's a woman's crisis. I know, I can hear you. I can hear you hyperventilating out there.
The good news, we can fix this for ourselves.
I'm Sallie Krawcheck, CEO of Ellevest, the investing platform for women.
Cheers.
Cheers.
And welcome.
Absolutely.
This little
Thank you
rosé
for having
because
me.
it's summer here. The guys just invest. But we women, we wait till we know everything, which is never.
My company has a matching plan to match 25% of whatever I invest. I'm just not sure if I should invest with a company or by myself.
If you can get a 25% company matching, you want to do that every time.
Is it really, really, really terrible to want security?
Never, ever, ever have I seen a company rescind a job offer because you asked for more money. You don't want to leave that money on the table.
Nobody out there has a man as a plan anymore, do they? That was sort of my mom's generation.
It'd be slick if we had an electric ironer, like Sally's mother has.
Want to be equal with men? Well, we're not getting there until we're financially equal with men. And they're investing, and we aren't. Boom.
Hi, I'm Nancy Armstrong. Welcome to Build. I'm joined by Sallie Krawcheck, the host of our new show, Makers Money. Welcome, Sallie.
Thank you. Great
Thanks
to
for
be
joining
here.
us. Now, you and I have been kind of joined at the hip lately, which has been delightful. I just want to say that. But you and I have talked about this. We actually were together on this stage a year ago, and that's really where the idea for Makers Money was born. You were talking about, we just launched your Makers piece, and you were talking about your new book, Own It. And part of that discussion centered around women and money. And I noticed people starting to lean forward and ears perking up. And I thought, And a year later, we've launched Makers Money with, in partnership with Yahoo Finance and Makers, and with you, CEO of Ellevest, the top investing platform for women.
Yeah, it's been quite a year. A lot going on to bring women to the recognition. As we say on the show, money is power, and it's time to level the playing field. That, you know, we don't have as much money as the guys do, as much as we love them, and until we do, we will not be equal with the guys until we're financially equal with them. And so what we try to do with the show is to go through some of these money gaps, demystify questions about money, and make it not boring, which is quite a tall order.
What are some of those myths about women and money that you debunk?
I could go on for hours. You know, and it's interesting because on the one hand, society tells us as women we're not supposed to talk about money because it's crass and unattractive. On the other hand, society gives us these messages that we get from even the time that we're little girls. A myth, boys are better at math than girls are. Well, that's not true. Girls, I hate to tell you, gentlemen, we make better grades than you do in all subjects, math included. We make as good or better grades. That investing is really a manly pursuit. And the messages we get from the investing industry, in which it's all about winning and beating the market and picking the winners, in which CNBC, which we all love, looks a lot like ESPN, and the industry symbol's a bull, a phallic symbol. So we get the message that this just isn't for us as women, and investing is for men. However, when women invest, we tend to outperform men. We tend to invest better with a longer-term perspective than men do. So there, any range, we're too risk-averse. We hear that all the time. That feels right. We're too risk-averse. No, we're risk-aware. We want to understand risk before we take it. Once we understand it, which the investing industry typically does a sort of poor job of telling us, we take on as much risk as the guys do, and then we don't tend to panic as much during downturns. So those are a few of them. I could go on and on and on, but I will stop.
Well, it's interesting timing, too, to have a show about women in power. How does this tie in to what's happening with Me Too and Time's Up?
It very much ties in. If you actually think about the women who have stepped forward and found their voices and spoken about the harassment that they have been subjected to, an underlying rule of thumb is that these individuals have been not financially independent, not wealthy necessarily, but financially stable. So if I think about in the technology industry, Susan Fowler, who called out Uber's cultural issues, she was an engineer in another job. So she had financial stability, and so therefore she had the ability to speak out without fear of, economic ruin. Whereas, you've seen women who have spoken out and been economically ruined in the past. And so having money means having power, means being able to speak out. And so I don't think it's any coincidence that when Time's Up came out, that one of the first things they did was establish a legal defense fund in order to get money to women who don't have the means to speak up so that they can.
So what can people expect to learn about when they tune in to Makers Money? We're going to cover a lot of topics in and around the topic of money. What kinds of things will people learn about, and what are you excited to cover?
Well, the short answer is we want to hear from the viewers. We want to hear from them about what they want to hear about, and then we want to be responsive to it. Our thoughts are attacking topics like student loan debt, which is crippling for so many young people in this country. And how do you begin to chip away at that? What debt should you pay back? What debt should you keep outstanding? We're going to cover topics like how to start your business. We hear a lot, again, from young people and mid-career people about that. Can I do it? I know it's going to be hard, but am I financially able to do that? We are, of course, going to talk about my favorite, investing. Why not? But a range of topics like that, really coming from the viewer, so that we can give you, and I promise you, it's not going to be boring, and I promise you, it's not going to be overly long, and I promise you, we're going to have some kick-ass guests, and we're going to very quickly, run you through these topics with very actionable ideas that you can use in order to put yourself further forward financially.
We do have amazing guests. Last night when we launched, we had Jai Vargas, and we have a shoot coming up with Carla Harris and Lovey Ajay. So we have a stupendous lineup of guests. But let's talk about the elephant in the room.
Yes.
What in the heck is going on in the market? And
they're going down.
Yeah. What should people be thinking about that or be doing about that?
Yeah. First of all, let me back up. If you tune into TV and you are listening to the pundits and they are telling you what the market is going to do, let me promise you they don't know. And in fact, I was talking to somebody today who said, I've been saying the market's going to go down for a year. And it is. I'm like, okay, so that means you were wrong for 51 weeks, okay? And so remember, anybody who tells you they've got it, they don't have it. In fact, active managers of money, those individuals who are paid, whose full-time job is to outperform the market, that's their full-time job, that's what they do. Do you know the percent of them that consistently outperform the market over a 5-year period? Do you want to guess? 0.1%. Okay, it's not 1%, it's not 10%, it's not 100%, it's a very small percent.
Wow, that's really small.
It's really small. And of course, these individuals are often paid very well for doing this, so nobody knows. What I can tell you is the market's going to go down, and it's going to go up, and it's going to go down, and it's going to go up. And I don't know how much up and how much down, but it will be volatile over time historically. The stock market since the 1920s, so pre the 1929 crash, through the 80s crash, through the subprime crisis, has returned 9.5% annually. That's a friggin' lot of return. And a diversified investment portfolio has returned, we estimate, around 6% annually. By the way, put your money in a bank, it's close to zero these days. You can't get that 9.5% or 6% without these ups and downs that I promise you hurt my stomach too, okay? Here's the great thing. If you are investing, you should welcome this. Because today, you can buy the market, you can buy these securities more cheaply than you could yesterday, or a week ago, or 2 weeks ago, right? And, over time, sometimes if you're investing regularly, say a little bit out of every paycheck, sometimes you'll buy high, sometimes you'll buy low, but over time, you should get these market type of returns, which again, can be life-changing for you. Now, if you've invested, and you've only got a little bit of time until your goal, I hope you're not fully in the equity markets. I would never recommend that because that's when you lose money and it feels bad. What you should do as an investor is when you have a long-term goal, put that in equities, volatility, higher return. When it's closer to time for your goal, you're going to want to have a more conservative portfolio so you're not beaten about by these kind of markets.
How do you start, though? What if you're a person who has never invested and you're not even sure you have enough money to invest? How do you get started? How do you find someone to help?
Right. Well, in fact, Nancy, that's why we have no minimum at Ellevest. I spent most of my career CEO of Smith Barney, CEO of Merrill Lynch on the wealth management side, and our minimum was like $250,000. And so we heard from people again and again, this is just unapproachable for me. At Ellevest, our minimum is a penny. Please do not deposit a penny. I promise you we lose money on that. But we wanted something where everyone could, after they pay off their high interest rate debt, their credit card debt, can begin to invest a little bit out of every paycheck. At Ellevest, we'll provide you with a diversified investment portfolio. You don't have to come to Ellevest. That's okay. It'll hurt my feelings, but I'm okay with that. But let's say you go to another provider. What you want to do is you want to have a diversified investment portfolio of low-cost exchange-traded funds. Ooh, that's a lot of words. What did those mean? What it meant is you don't want to invest in any one thing. Even if it's Facebook stock and you think it's going to go up, you could well be wrong. That's a disaster. So you want to have a portion in equities, a portion in bonds, right, which are debt obligations, a little bit in cash, a little bit in international equities, international bonds. You want that to be riskier when you're younger to give you the chance to earn higher returns, and less risky when you get older. And you want to really pay attention to fees. Investing is one place, you know, unlike retail, unlike fashion, where if you pay more, you're not getting more. And the fees come directly out of your returns. And so you want to, if you have a person you're dealing with, keep your fee below 1% of your assets. If it's a digital investing platform, you want to keep your fees below 0.5% of assets. And those do add up over time. But find a place that you're comfortable with, whether it's online or a person, something that speaks to you, and then try to set it. In times like this, please don't look at it. Just please don't look at it. There's no good that comes from it if you have a long-term goal and you're looking at it every day. I promise you it will make you want to do something, and I promise you that something is typically not a smart thing to do because it comes from a sense of panic.
What are some of the biggest mistakes that women make with money? I know, you know, women are afraid to invest, and, you know, what are some of the mistakes they're making?
So they're not what you think they are. So if you Google, mistakes investors make, you're going to hear about overtrading. You're going to hear about panicking in markets like the ones we're in. You're going to hear about falling in love with the winners. You're going to hear about, churning accounts, et cetera. Those articles all need to be retitled Investing Mistakes Men Make. We love you, gentlemen, but those are mistakes you make. We women, on the other hand, the mistake we make overwhelmingly is we don't invest enough. Women today, on average, have more than 70% of their money in cash. Now, it earns nothing, close to nothing. What does that mean? With inflation, you're actually going backwards every day. Sure, you need some cash. You want to have an emergency fund that's a couple, 3, 4 months worth of your take-home pay in case of an emergency. But you want to then be investing the rest. 401k at work, invest there, an outside investment account as well. And if you're nervous about the ups and downs, which I totally understand, you don't want to do it all at once. You don't want to try to call the market. You want it to be a bit out of every paycheck. Maybe what you can afford today is 1% out of every paycheck. And a couple months from now, make it 2%. A few months from now, make it 3% till you get to 10 or 15%, ideally, of your paycheck that's going towards your investments to buy you that house you're dreaming of, to start that business you're dreaming of, to make sure that you're the most badass grandparent that the world has ever seen. Future you will thank you.
That's great. So we're not just talking about money, though. We're also tying this into career choices, because that's also tied to your financial future. What are you seeing women doing in their careers that's holding them back financially?
I want to say sometimes we're working for people who don't appreciate us. I really do see a mistake that women make in an age in which we're revealing the sexual harassment. And so therefore we know that these gender biases or maybe gender expectations that are probably more broad-based than we think they are. A mistake I see a lot of women make, quite frankly, is not that they don't ask for the raise, though they should ask for the raise, not that they don't ask for the promotion, though they should ask for the promotion. Everybody's talking about that. a lot of times it's they're working for someone who does not appreciate them and who, because of his gender lens, is not promoting them when they're ready for it. And so what I say to ladies is, you know, if you see Joe promoted ahead of you, okay, raise your hand, tell the boss you're ready for a promotion. Tom gets promoted ahead of you, not so happy about that. Nose to the grindstone, reiterate your interest to the boss. By the time he's promoting Todd ahead of you, that's when you know that it's not going to happen for you. And the amount of wasted time and energy that I see individuals put into working for a boss who doesn't appreciate him, perhaps because he's from 1952 in terms of his mindset, is really tremendous and has really lost economic potential. And so sometimes it's time to say, you know what, I'm taking my talents elsewhere.
You know, I want to veer off for a second. We just had the 2018 Makers Conference in California this last week. And one of the things that was top of mind was, of course, the Me Too movement and Time's Up. And I was thinking about so many stories that you have coming up in the 80s and 90s, which were a dead feminist decade, or a couple of decades, where you know, we were a little bit on pause with feminism. No one wanted to talk about sexism, but it was rampant in the workforce. What are some of the stories that you had to endure?
Oh, my gosh. Well, you know, but it's funny. There's still some, so I'll tell a few different stories. You know, when I went to Wall Street in the late 1980s, you know, I had Xerox copies of male body parts and not the kinds that usually see the light of day during the work hour, left on my desk. I mean, every day. And I would walk and be like, what is this sort of squished? Oh my gosh, you know, it's a part. It's a male part. And people say to me, why didn't you report it? I didn't know I was allowed to report it. Why didn't you go to HR? What's an HR? I needed the job. I was right out of college. I'd signed a lease. My parents are not well-to-do. If I got fired or quit, I would have had to declare bankruptcy. And by the way, 1987, remember, it was the crash. There weren't jobs that were around. And so I had to just sort of put my head down, pretend like it was a joke, keep working. I remember one day leaning over a desk and having someone pretend to perform a sex act on me. You know, it was just humiliating, right? You almost just felt the very act of being a female was humiliating. Frankly, I thought it had gotten better over time. And, you know, I hope overall it did, but the stories we're hearing today are really tough to stomach. But it hasn't completely gone away. I certainly don't experience that today. But I've shared one story recently when I was raising money for Ellevest, venture capital money for the company, and was out in Silicon Valley pitching as one does. And I'm in a meeting with a venture capitalist. Now, there's no reason y'all should know my background, just by way of background. I ran Merrill Lynch. I ran Smith Barney. I managed more financial advisors than almost anybody. There may be one person who's managed more than I have. I'm pitching this venture capitalist. I begin to say, at Ellevest, we're going to be adding some financial advisors. And he begins to explain to me, sort of slowing down his voice, taking a little, easier, what the profitability dynamics are of the financial advisor industry and what it's like to manage them. And I'm thinking to myself, did he not listen when I introduced myself? Did he not read my bio that's right here in front of him? Or did he do all of that and decide anyway he knows more about this than I do? And it was just this fascinating moment of, people say, did you store him out? Of course I didn't store him out. Of course I said, thank you, that's so interesting, because I needed the money. But it's interesting that, of course, it wasn't like what I experienced earlier, but that even after having some degree of success in my career, that you're still viewed as being the junior person when you know more, still tends to permeate our society.
What are the top 3 pieces of advice you give to women in their career right now in terms of moving ahead, in terms of navigating a still not solved issue of misogyny and sexism in the workplace?
Well, I'd say the first piece of advice is, even through all of it, I have found that nothing beats hard work for being successful. That I really hoped when I was younger that I would be smarter than everybody else, and unfortunately I was not. But I could work hard, and I could put in the hours, and I could find a job I loved so much that when I was working hard, it didn't feel like work. It really felt like a joy. So I'd say that's the first thing. I'd say the second thing is before you take a job, really check out the culture of a company. Talk to people you know who work there, look at their website, look at their annual report, look at their statistics. And if you're looking at a senior leadership team that doesn't reflect you, you're going to want to take that as a warning sign, right? Gosh, I look at this and it's, 12 white, middle-aged white guys, and I don't happen to be a middle-aged white guy. In this day and age, they couldn't find, someone they thought was worth promoting who looks like me. I take that as a signal. And what the great news today is that there are any number of websites that you can go to, such as In Her Sites that, or Glassdoor, that rank and talk about the culture of different companies. So you can get much more information than you could. And so try to find a company whose culture fits you. And the third thing I would say is, absent that, think about starting your own thing. It is tremendously stressful. It's very difficult to do. But boy, it's much more doable than it was because of crowdfunding today, because the cost of almost everything about starting a business is coming down. Technology. I mean, you don't have to rent real estate anymore. You can go to a WeWork. You don't have to travel. You can do video conference. So the costs are coming down in such a way, and then the ability to get funding is in such a way that you can start a business today. And that way you can actually build the culture you want to work in, which is, by the way, the #1 reason women start companies.
That's great. Okay, so this is a question that you've been asking people on Maker's Money, so I'm going to ask you, what's the stupidest thing you've ever done with your money?
The stupidest thing I ever did with my money was when I was working at Citigroup, the senior leadership team there had a blood oath that we took. And the blood oath was that we would not sell our stock. And so the advice I gave earlier about being diversified is not advice that I, who was actually running a wealth management business, took. And you could get permission. You could go to the boss and say, hey, I've got this, I want to buy this, I want to do whatever, and sell some stock. But I was fully committed. I was bleeding Citigroup blue. I never sold a share. And that was an amazing strategy when the stock was at 53. And it was a less good strategy when the stock was below 1. And that's that was as my old boss used to say, that was a long afternoon. It was a long afternoon. So that was easily the stupidest thing I did, that I lived by that oath rather than going to him and saying, look, guys, this is dumb. We should diversify. We should all diversify. We can still bleed Citigroup blue, but, maybe just wear a green shirt or something instead.
Okay, what's the smartest thing you've ever done with your money?
I hope it's starting Ellevest. I hope it's still to come because it is a business that I am incredibly passionate about that has a real mission to it. And the mission to it is, as with the Maker's Money show, to get women more money. I mean, that's the bottom line. Through investing, no guarantees. My compliance officer is freaking out right now. No guarantees. Markets go up and down, et cetera, et cetera. But my entire goal is to help women become more financially stable, have more independence, have more power, have more control, have more fun, have more freedom, take care of their families by getting them more money. And so the money that I've put into Ellevest, I hope, will have a great return on it, whether financially, sure, but also just in terms of the joy that it brings.
Well, you're filling a need, that's for sure. Let's throw it out to some Q&A.
Oh, hey, how are you? I was wondering your thoughts on cryptocurrency and blockchain technology. Are you pro or against it, or what are your thoughts?
So there are a couple, they're different things, and they're actually very different things. And blockchain technology, I believe, is it's here to stay. It's going to help the Wall Street firms with security. It's going to take, I think, tremendous cost out of the industry as well, and probably a lot of jobs as well. So I'm bullish on blockchain technology. Cryptocurrencies, on the other hand, that's called gambling. That is not investing. And if you have money that you have put aside to go to Atlantic City, and you decide that you want to, in the comfort of your own home, buy cryptocurrencies instead, go for it. I have no idea, nor does anybody else, where those things are going to trade. Remember I said that about the stock market? At least with the stock market, you look at fundamentals, company earnings, interest rates, but you can talk about it getting to a reasonable valuation over time. There's not a person in the world that knows what the right value is for cryptocurrencies. Now, by the way, cryptocurrency may be the future. You know, if you think about a common global currency, you know, where you can move money around the world, it could be that. Or it could be that it already exists and it's called gold, right? I actually like, do I have on gold? Yes, I do. I actually have worked hard to convince my husband that when he buys me gold is an asset allocation decision, right? Because it doesn't go anywhere, except it's right here, and we're just shifting our assets into a more stable, conservative.
It's mobile
class.
wealth.
What?
Mobile wealth.
There we go, mobile wealth.
Hello. Thank you so much for being here. I just wanted to know if you had any advice for women of color who tend to make less than their white female counterparts in business.
And everything, right? And have their businesses funded to a much lesser degree than white women, certainly men as well. You know, I don't know that I have better specific advice than to try to find jobs in places where the workforce looks like you, where the senior people look like you, where there's a commitment to advancing individuals, where there's a commitment to diversity. When we founded Ellevest, I stated very clearly to our team that we have more women than men, but other than that, I want our company to reflect the population at large. And so we've got close to 40% people of color within our company. And we're very thoughtful about how we hire it. So I think taking a look at the company composition, asking them about their pay gaps, and do they report them out? If they are not measuring them, then they have pay gaps that exist. If they are measuring them, then they have the ability to work to close them overall. But to have those it's much better to have those conversations before you take a job and before you start than after you do. And talk to people who are there and talk about how they've been advanced and what they're seeing within the companies.
Okay, one more question.
Hi. First of all, I love your boots. I can't take my eyes off of them.
Thank you.
Seriously.
I love my boots too.
My question is, I could just see that you were very resilient and kind of a go-getter your whole life. But what is your advice for women like yourself? When you have a lot of people intimidated by you, how do you sort of not downplay your talents, but yet not scare everyone off enough to still get to your end goal?
I've never had that question asked before. Do you think I'm intimidating?
It's a good yes.
Really? A little bit. Okay, well, let me answer a different. I'm going to answer the question I want to answer.
I'll just say, just so you understand, just because, Sallie, you are incredibly accomplished, you made it all the way to the top of Wall Street, you're a groundbreaker. Therefore, people look up to you and admire you.
And I've had success and I've had failure. I've had public failure. I love to say, because it's true, that I hold a world record. I'm the only woman to be fired on the front page of the Wall Street Journal twice. So there have been ups and downs along the way. But let me answer the question more broadly, which is trying to find ways to connect, in the workforce with individuals around you. And what I more fought during the course of my career is being the only woman, and how do you make a connection with the individuals there who didn't always act like you, and sometimes where you weren't particularly welcome. And I found two ways to do it successfully, one of which was back to hard work. I always had the numbers. And that particularly on Wall Street and in the investing industry, if you had the numbers, then you had the answers. And so people had to speak to you. When I was a research analyst, I was the gal who did all the multiple regressions of the profitability metrics of the Wall Street firms. It sounds boring. I promise you, if you were in the industry, it was super interesting. And so they had to talk to me, okay? And the second thing was a sense of humor. And that I found that if you're laughing together, then you're forming a connection. And allowing some of the day-to-day stuff to go by, you know, I'd be asked to get the coffee rather than just being infuriated. I can't believe you asked me to get the coffee. How dare you? Da, da, da. Just let it go by, right? I'll get the coffee this time, Joe. You're getting the coffee next time. Or I'm getting it. You got to clean it up. And letting some of that stuff flow by so that you could sort of save the fight for the bigger stuff. And then I think, you know, to your question, I hope by keeping a sense of humor, you know, I don't like the word intimidating, so I hope I'm not. People what? Well, you know, I haven't heard that one. I do hear sometimes, you know, people think I'm a bitch.
That's a compliment.
Yeah, well, it was fascinating because even a fellow who I know who's a huge advocate for women, he and I were working on a transaction together, and he kept saying, you know, the whole way through it, he kept saying, I can't believe how great you are to work with. And I'd say, so are you. And then about a week later, he'd say, I really can't believe how great you are to work with. And I'd say, so are you. And then finally I realized it was because even though he's a big vocal advocate for women, he had fallen into that gender expectation in which we believe or we perceive successful men as being likable and we want to spend time with them, and we perceive successful women as unlikable and bitchy. And so he had fallen into that thinking, gosh, you're surprisingly likable. Now, I can totally be a bitch, but only when I have to be. And I like to drink and have fun.
Well, thank you so much for joining us, Sallie. You can watch Makers Money on Yahoo Finance and at makers.com/makersmoney. Please tune in for new episodes every Thursday at 6 p.m. Thank you for joining us.
Thanks.